Good morning and welcome back to Almus Market Mornings. Strait of Hormuz and whether it's open is a widely debated topic now, with different countries having different answers. Over the weekend, this confusion was strongly evident, with a few ships getting fired upon by the Iranian side, while there was also simultaneous blockage of Iranian ships by the US Navy. Today morning, apparently, US Navy took over an Iranian ship, blowing a hole in its engine room after it refused to stop. The latest update remains that the strait is completely closed, well evidenced by the fact that oil prices have once again jumped higher. We are also starting a new week, so let's understand from JK what he's looking out for. Good morning, JK. What's your sense of the strait? Who is permitted to traverse through the waterways, and what are you watching out for this week?
Good morning, Swaraj. I think the war-related volatility is reaching record levels in the market, and even as a news from the war front itself has been quite volatile. And as you said, the Hormuz Strait now remains fully closed. And if you look at who is allowed, it's not clear. There was an incident where Indian flagged ships were also fired at, although there was no casualty or major losses. But that is a bit shocking because earlier Indian ships were allowed to sail through very freely. Now, both Iran and US are accusing each other of ceasefire violations and taking shelter under that to continue the blockade from the US side and the closing of the Hormuz Strait from Iranian side. So this is a stalemate that is affecting the global trade once again. Of course, on Friday, when there was an announcement from Iranian side that the Iran is opening the open Hormuz Strait completely for all commercial vessels. There was a huge rally all across. We did have the stock markets in US rising more than 2 to 3%, and the dollar falling to new 2 month low, and yields also falling. But didn't take more than one day to reverse these moves. And particularly the oil price, which had fallen almost 12%, reversed to more than half of it by Monday morning. So I think market is now very tentative, very edgy, based on what news comes next. And in the meantime, the second round of negotiation between US and Iran are scheduled in Pakistan from today. US is sending its delegation, once again led by Vice President Vance. However, Iran is yet to decide whether it will take part in the new round of talks with the United States. With the state news agency saying there is no clear prospect of fruitful negotiations. Now, what is also happening is that there are multiple authorities in Iran. There seems to be a clear divide among the hardliners in the IRGC, the Iranian militant group, as well as the Iranian president. So they are talking different languages, and that is also leading to a lot of confusion. So that is the state of situation in Middle East. In the meantime, we have also heard about Trump renewing his threat to blow up everything, right from power plant to bridges in Iran, if the leaders do not accept a deal with the US. So it does appear, markets are still, I would say, leaning on optimism. And there is a thinking that both Iran and US are using these as pressure points to get a better negotiated deal. And we hope that it is true, and eventually we get a more sustainable peace agreement for the good of the global economy. So, as I said, there have been massive movements in the markets, and today, of course, there is a mixed moves in the Asian markets. Uh, Japan and Korea are up, and even India is showing up move in the stocks, but the dollar is stronger. Gold is also lower. Having hit a high of almost 4890 on Friday, it is now around 4750. And the Indian rupee, of course, is in a world of its own, because more than the global events, the moves by RBI in the last 15 days have been determining the rupees moves. Initially, it was the regulations on bank positions. The deadline ended on April 10, and then since then there have been directions from RBI for oil companies to not to access the spot market for the USD INR, but to access the credit lines that are available, and also route all their purchases through State Bank of India. And this has actually curbed a lot of demand from the spot market. And if that continues, there will be a better balance between demand and supply, although it is not a lasting solution, definitely. Because at some point, these dollar payables will have to be covered by the oil companies. However, it does look like the government and RBI, they are buying time to see whether the capital flows resume, or whether they can introduce more measures to improve or attract more capital, foreign capital. So that is what the market is watching out for. So maybe for some more time, the rupee will be seen in the range between 92 and 93 half. Of course, a resumption of capital flows will be a big boost, and we can probably see the 92 level break also. If that doesn't happen, we might well be in range, or perhaps at some point the upside can be retested as well. Now the Brent oil not coming down, or the overall the crude oil prices not coming down, is continuing to be negative for the Indian market and the Indian economy as well. Now, apart from these war-related news, of course, we have the inflation data from UK and Japan this week. This is important because now we are seeing the central banks on the cusp of monetary policy directional change, from cutting rates to raising rates, particularly in US and Europe. Japan, of course, has already been raising, but it has been very hesitant to move at a faster pace. So that is something that the market will be watching out for in the inflation number, whether it gives more scope for raising rates. And of course, we also have the flash PMI numbers that will be announced this week. Not major data from US, but the flash PMIs will be from various regions will be seen. From Indian point of view, no, there has been mixed news, because there was an attack on Indian flag vessels, as I mentioned earlier, without any casualty. Of course, that was slightly shocking. On the other side, positive side, I think US sanction for import of Russian oil by India has been waived till May 16th. So that's some sort of a relief for India. They can continue to access the Russian sources for oil. At least the supply side is taken care of. All the prices are going to be higher, and it's going to be a negative as well. And of course, this is also a week when the crucial, the political event of elections to a couple of state assemblies in India is also starting this week. And of course, we have the results at more than 10 days away on May 4th. But the market will be interested to see whether the government consolidates its current position through win in these elections or not. So just a background for the market. Of course, what we are also seeing is that FI numbers for last week were mildly positive, just about less than a billion, I think around 600 million or so, but nothing, to change the view that, they have come back in big numbers. But we'll wait and see. Because we also have had better earnings reports from Indian corporates, could have given a sense of the valuations being more reasonable now. So that's what the market is looking for, both stock market and the Indian rupee exchange rate. If the capital flows improve, I think we have all round better atmosphere for the Indian markets. Thank you.
Thank you, JK. And yeah, so today morning it seems the entire trend, which started on Friday, where the very positive update that Iran would be opening the strait for all vessels, which created a huge cheer for risk assets, all of that has reversed after the updates from Saturday, because both sides don't seem to be really keen on opening the strait. On one side, Iran looks like Iran has been attacking some vessels. On the other hand, US has also been blocking Iranian vessels. So it's like a stalemate that's happening over there. Important to see. The second round of negotiations are set to begin today. How that will pan out. Definitely, Iranian side is not certain to participate as of now. Looking at the latest updates. Uh, Overall, Asian markets looks like equities are holding on. Dollar is, of course, slightly stronger. Gold is lower. Indian markets are on a world of its own, especially rupee. Regulatory moves and the directions have been sort of driving rupees move on the stronger side. We'll see if like this is something that lasts or not, because capital flows, that's the main point of contention that remains elusive. Inflation data from UK and Japan would be something to look out for if the hiking cycle is well in place for the global central banks. That's it from us today. Thanks for listening. We will catch up tomorrow with the fresh round of updates.